As we go into a long weekend, maybe it's a little bit of playfulness, but I'm thinking about Chutes and Ladders. I'm thinking about the Chutes and Ladders in two ways. In one way, in terms of the P&L of an account, how many traders work to grow an account, and then with some poor risk management decisions, poor stop losses, poor decisions on when a trade is no longer valid, they zip right back down in their P&L. And I think this is an analogy for account growth. Are you playing Chutes and Ladders? Not really making progress. And how do we play Chutes and Ladders positively, right? How do we watch something that might be overall moving higher and then wait for a little bit of a dip, all right? Wait for a little bit of a dip only to then look for the trend to resume. That's kind of a Chutes and Ladders analogy as well. So let's get into it. Let's talk about gold. Gold is selling off quite a bit today. It's in an overall uptrend, and it's on sale. Why would I call gold on sale? Let's go through some of the indicators on this chart that show you how to do this, how to say gold is on sale versus this is a downtrend. First of all, we have to start with structure. The top row tells me of bullish momentum. The bottom row tells me of a bullish trend. The consistency of the green candles, even today on the sell-off candle, tells me that just about everything that I would want to see in a bullish chart, this is the daily chart, by the way, of GLD, everything I want to see is bullish. This is something that's valuable, and it's on today, right? It's on sale. And I want to mention that the last time that we did this was back in here. It's the last time GLD was on sale. We did this on the 27th of January, and here we are looking for another dip to buy on the 14th of February. And this is a slightly different kind of dip, but it's a much more established uptrend at this point. If something is valuable and goes on sale, the presumption is for trend followers that someone's going to see this as a valuable thing, as something going on sale, and the buyers are going to step up. I wouldn't say that in a downtrend, and I wouldn't be as close to that opinion if I didn't have an uptrend. Again, uptrend is where I say something is valuable and it's on sale. Something that's garbage, not valuable, in a downtrend, right? We won't say the same thing of. So the first thing is know the structure of the thing that we're trading. If I look at the structure, for example, let's contrast gold with, say, Tesla. No knock against Tesla, but right now, this is the kind of environment where I would be bearish and I would be more apt to short the rip or leave it alone if I don't want to play a downtrend, right? Wouldn't it be great to have a process where we say, you know what, now is not the time for long calls in this particular symbol. Let's contrast that with Meta. Right? How are your tools telling you to focus on the long side and long side only of Meta? Well, green candles, consistent green candles for the past 3 weeks here on Meta. The trend kicked in right at the second segment of the multi-trend, which specifically was the 31st to the 3rd. So as we were ending January and starting February, Meta turned into most definitely a trend, but as long as those green candles were dominating with no red, here's a really easy way to look at it. Rag, how do I know if I want to be a buyer? Really easy. There's no red. There's no red candle. And if there's no red candle, no problem. Look for even a yellow candle in the gray zone, or even better, a green candle in the gray zone, right? That's how I know I want to be a buyer of Meta. Let's look at something that's in a little bit of flux. Apple. All right, for a long time, for a good long time, most of the year, Apple was basically red and yellow. You can see here, that's bearish. When the immediate candles in front of the yellow are red, that's bearish chop. Favor long puts, favor the downside up until, right? This is basically kind of, are we in transition or do I still need to be bearish? And look, there's always going to be a point in time with a shift from bullish chop to bearish chop, or bearish chop to bullish chop becomes apparent. And now for the last 2 sessions, that's what we've got in Apple. 2 really easy decisions to make. Yellow means maybe just don't do anything. Red, I can be long puts in the zone of the gold, and green, I can be long calls in the zone of the gray. Now I'm pointing these out because this is the way in which I look at my trading. Automate the things that make life really easy to determine the high probability direction. Automate the zones from which I want to be long calls or long puts. And that way I can go through a lot of different symbols and make the same kind of decision without emotion and without any kind of subjective or manual analysis. There's nothing here that I'm doing manually other than choosing what symbol it is that I want to take a look at. Let's talk about another symbol to stay away from right now. Right? So we don't end up with that chutes and ladders in our P&L. Look at Google. Stay away from Google for a while. For a while, Google was great. And then the red candle came in. Earnings was the first reason to kind of go on the sidelines and wait. Since earnings, it's been nothing but red. We have to trade the reality that is now, not then. And this is where a lot of traders start experiencing this. Right? Chutes and ladders comes from poor position sizing, improper stop loss placement, and a lack of a set of tools that doesn't give you the clarity of, hey, let's stay bullish. Here comes earnings. Let's sit on the sidelines. And here are the red candles. Let's stay bearish. A sector that's worth keeping an eye on going forward would be XLF. Along with gold, XLF is a long position we have in the Sector Secrets Mastery. Again, let's look at the tools. Green trend, green momentum, and focus on the gray zones. And this is not a great example of an uptrend, but it still makes sense to be bullish over being bearish. And the great thing about either being bullish or bearish is that every day we can determine if the probability is for the upside or determine if the probability is for the downside. And we're not looking at a chart going, well, I could buy a call or I could buy a put. You know, that uncertainty leads to a lot of over trading. One of the things that's not talked about enough is if you don't have a really clear-cut way to determine structure and direction, over trading comes from a lot of times, well, I'll be bullish today, I'll be bearish tomorrow, I'll be bullish again. And there we go right back to chutes and ladders, right? So that's really where the tools that I use are so important. And, you know, I do want to mention that the immersion is still happening. So if you haven't yet checked out what we're doing, do so. The different packages either give you 12 weeks of weekly workshops with me. The class is actually broken up into nice bite-sized classes over the next 3 months. We have packages that include the tools that I'm sharing with you here. So depending on what you need, you can check out what we've got over there. But this is a great example of how to use these tools and what we're looking at as we go forward into what's been a very choppy year, but certainly a tradable.